Hello and welcome. This is Les Goldstein, President and Founder of Personal Financial Strategies, located in beautiful Park Ridge, Illinois. And this is our Welcome to 2014 introduction. Well, 2013 sure flew by quickly, didn't it? With this 2013 recap, we will share some of the important events that took place this last year, and I'll talk a little bit about what investors might be seeing in the upcoming weeks. 2013 was a banner year for stocks, and it marked the 5th year of the bull market. Despite a great deal of volatility in the marketplace, stocks, equities performed very well, giving the S&P 500 its best year since 1997. For the year, the S&P 500 rose 29.6%, the Dow gained 26.5%, and the NASDAQ grew by over 38%. The U.S. economy also ended 2013 on a high note. Gross domestic product, GDP, a measure of economic activity, grew by an estimated 4.1% in the third quarter, the fastest pace in almost 2 years. We don't have fourth quarter data yet, but some economists believe that we may see sustained gross domestic product growth of 3% for 2014. The labor market also improved significantly in 2013, and unemployment dropped to a 5-year low of 7% in November. Payrolls increased solidly in November as well as in October, and weekly unemployment claims fell in the final weeks of December. What's better is that recent hiring trends show that gains were spread across both low-wage and higher-wage sectors, meaning more Americans have been able to find better-paying jobs. Company earnings, a very important gauge of the economic success in the country, rose for the 4th straight year despite weak demand and challenging conditions. Total earnings for S&P 500 companies in 2013 are estimated to have increased by 5.4%, painting a hopeful picture as we move into 2014. Investors were willing to pay outsized prices for earnings results, pushing price-earnings ratios to an average of 15.4 by the end of the year. By that measure, stock value increased in 2013, but price-earnings ratios, as measured by the S&P 500, still remain below the 20-year average of 16.5. That may mean that stocks are still relatively affordable based upon the last 20 years. Now let's talk about Washington for a little bit. Political gridlock in Washington stoked some market volatility in 2013. While budget slowdowns have rattled the markets in previous years, investors started to get wise to Washington's habit of gamesmanship. Despite dealing with a 16-day government shutdown, investors stayed calm and markets rose sharply in the period immediately following the budget deal. Some estimates put the cost of the shutdown at $2 billion in lost productivity, plus the cost of ripple effects across our economy. Fortunately, a bipartisan deal reached in December promises to remove a lot of the uncertainty that hung over markets in 2013 by alleviating a new round of sequestering cuts and stabilizing government funding through late 2015. Politicians will still have to tackle raising the Treasury debt ceiling in 2014, but we hope the bipartisan good feelings will help avoid another showdown. The Federal Reserve Bank was also very active in 2013, and anticipation of a slowing in quantitative easing drove a lot of volatility. The Federal Reserve Bank, formerly headed by Ben Bernanke, bought $85 billion in bonds each month in 2013, a move that was designed to hold down long-term borrowing rates and encourage spending and investment. After months of anticipation, the Fed finally announced a reduction in the pace of their bond purchases at the December Federal Open Market Committee meeting. Markets rose after the announcement because investors viewed it as a vote of confidence by the Fed in the strength of our economy. Looking ahead, we are optimistic for a positive 2014. However, I certainly am not looking for the type of results that were achieved in 2013. It's possible that stocks will slow their pace of growth, but we do believe there's still some upside potential if the U.S. economy continues to gain steam. While a pullback in the next few weeks is possible as investors consolidate their positions, something we're seeing right now this last week, January has historically been a good month for the stock market. Although it's not possible to predict trends with any accuracy, we're always on the lookout for new opportunities for our PFS clients. Here are some of our upcoming events. On February 6th and February 12th, we will be holding 2 state-of-the-market lectures at McCormick and Schmick restaurants in Skokie, Illinois. This will be a very content-rich lecture on our outlook for 2014. Seating is very limited, and we have reserved some seats for your guests. Please RSVP as soon as possible to Sherry at 847-268-3670. Sherry's extension is 102. That's 847-268-3670, extension 102. And due to popular demand, we will be holding our Big Picture Retirement Planning Workshop classes again this spring. This will take place at Oakton College or one of their affiliate schools through the Oakton College Community for Lifelong Living and Learning. As a current PFS client, you can attend for free. We will be sending out an email to every PFS client and friend to share the specifics with you very shortly. Once again, this is Les Goldstein, President of Personal Financial Strategies Incorporated, signing off for the month of January 2014. We hope you've enjoyed this brief recap of the year, and all of us over here at PFS wish you the best for 2014, healthy, happy, and financially stable. If you have any questions about what I just shared with you, or if you'd like to have an update of your personal financial situation, please call Sherry at 847-268-3670, extension 100, and she can find either me or Robert Hart, Yvonne Haverland, Jean Benedict, or Richard Kuberger to assist you. Thank you and stay warm. Bye-bye.